Good morning, everybody. Welcome to the Flow Show. It is Wednesday, the 3rd of December, and we've got a bit of a grind going on in the dollar this morning. A bit of dollar weakness creeping in across the board. Various pairs creeping up and higher. Sorry, let me just switch my squawk off. Morning, Kay. How you doing?
Morning, Ryan. Morning, everybody. Yep, doing fine, mate. Doing fine. Another day, another dollar.
Yep, or not, as the case may be. Another euro and another pound, another Aussie dollar, by the looks of things. Everyone's giving up their dollars and taking everyone else. Right, let's get cracking and get stuck into the news. We've had a bit of news out of, well, say news out of China, a bit of a opinion, shall we say, from an economist at one of China's biggest investment banks, saying that perhaps now is the time for Chinese authorities to allow some strength in the yuan. Could say that might be behind this move lower in dollar yuan, but as I say, there is a broad dollar selling going on at the moment, which is partly behind that as well. But even so, we're seeing the yuan strengthening again, or continuing to strengthen versus the dollar. As you can see there, we've got quite a hefty move going on there, which is good for your shorts, mate. You've broken the 709, 7010 area.
Yeah.
Now. Big figure next.
Yeah. Now, I'm wondering if that article is seems like to be one of those economists who are not too far away from the government, perhaps, because he seems to be a very well-known person over there. Well, over there. First time I heard about him, but yeah, it could be. But I think it's just generally the dollar being a bit weaker. But it's been coming right in the yuan. Whatever's been negative, and we could argue that the data were not extremely supportive for the yuan. It's been shrugged off. So I don't know whether it's like a guided strengthening of the yuan. There's two sides to a coin all the time. It's not great for exporters, but then how much is expressed in yuan, in their exports. But if your currency is doing well, it gives that sense of security, perhaps, to get into different Chinese investments, and perhaps that's a bit going on. As I said a couple of weeks back, even Volkswagen is upping its local production in China, which is a bit counterintuitive if you see that most of the officials are trying to deleverage a bit from China, but it's behind the scenes. Something different is going on.
Yeah, very much so. Very much so. There's all sorts of going on, particularly in the auto industry, and none of it is particularly good for everyone else in terms of the auto sector, Germany, UK, and the likes. But that's a subject for the pub rather than here. Right, let's move on to the RBA and Governor Bullock. A little bit mixed in some of the comments. Says the labour market's still a bit tight, but it's likely we are already at potential growth limits. So maybe not too much upside is being expected from here. Says some of the rise in trimmed mean inflation is temporary, but then goes back to a hawkish self, saying that if inflation proves more persistent, it would have wider implications for policy. We had some data out of Australia. Q3 data coming in a little bit softer than expected, 0.4% on the quarter, 2.1% year on year. So it was a gain year on year in the end, but not as much as expected. But that quarterly number coming in a little bit softer. Before that, we did get some other manufacturing PMIs, services PMIs, which the manufacturing number came in as expected, and a rise from the month before. Services as well improved a bit better than expected as well. So the data over there looking okay. Yeah, go on, mate.
No, I'd say the people were saying about the numbers coming out weaker than expected, but then if you look at the year-on-year CPI, it's still the highest for the past couple of years. So I would argue that the numbers may look red versus expectation, but GDP isn't too bad if you look at it spread over a couple of years, the quarter-on-quarter numbers. Also, the capex was pretty decent, and Bullock, yeah, she was a bit of a mixed picture on growth, but still fighting against the inflation. Huh? She didn't open the door to a cut in December. When are they meeting, by the way? Oh, it's very soon. Next week.
Yeah. Yeah, we've got a few next week. Well, next 2 weeks is going to be busy with central banks.
Yeah.
So,
So she still doesn't hint at a cut coming, and I think that's maybe also why Aussie is doing pretty okay.
yeah. Right, we're going to stick with the data while we're here. We had Japan's services PMI coming in at 53.2, which again was a bit of an improvement. They got this other funny one here as well, which went up too. We had the Chinese numbers as well coming in a bit later on, if they're on there. I can find them. There we go. The Kaiji number coming in at 52.1 as a final. So that just confirmed the lower than 52.6 previously. Switzerland still not out the woods in terms of inflation. That was another negative month, down 0.2%, and inflation is flat on the year. Not too much of a move in the Swiss EK, but their pressure is still on those bozos and making rates negative.
Yeah, we're back we're back to watching paint dry in the Swiss, right? It does look though that this decent offers just around that 93.45.50 on the Euro Swiss. If the market could clear that, then I think we may have a little bit of a revisit of those prior that 90 those lower 94s there. I think you were those 93.80s, but I'm especially looking at around there, and then up to 94.30, 40. That's going to be a big zone. But we're finding offers right now at 93.5, so that needs to be cleared, and then we could move higher, because for the moment it's just treading water.
Yeah, it does love running into these silly little levels that, they're just sticky. You wouldn't necessarily trade them unless you're wanting to take profit when you're not getting through. But you got all these little funny levels, and it just, they're up at this 30s when it came up here. They're not clean levels, but
no.
Yeah, we see the price running into trouble against them.
You never know where the Swiss are going to sit,
Yeah, I'm sure
they have their own agenda.
Lines.
They have their own agenda. They don't care about what the rest of the world thinks.
Yeah, exactly. Right, staying with the data, Spain went a little bit backwards on their services PMI. This isn't the final, this is the full number, 55.6, so down a big point over last month. But the rest of Europe all saw decent improvements. Italy saw a beat of last month and expectations, 53.8. 55, I should say. That was a composite number. The services was 55 over 54 prior. All the finals pretty much in Europe improved as well. France, 51.4, quite a reasonable jump, confirming the beat of last month. Germany as well, 53.1, although it was a beat of expectations, still negative number over last month. Eurozone as a whole, just reflecting all the rest, 53.6. UK as well, a beat of the flash number, 51.3 over 50.5, but again down from 52.3 last month as well. Then we've got a bit of PPI data over in the Eurozone, and a little bit soft, coming in minus 0.5 year on year and up 0.1% month on month. Bank of England's Bailey was out and about after the financial stability report. He's giving some stock advice, saying unlike the dot-com bubble, tech firms do have positive cash flow, though not all may be long-term winners. He didn't give his top 5 stock picks for tech firms in that comment. He said supervision on dollar funding is much tighter than pre-global financial crisis. Says there will need to be frank conversations if we see very big deregulation moves in the US. That's all as far as it will go. Conversations. I doubt they'll do anything about it if Mr. Trump decides to cut a lot of red tape. ECB's Nagel with some positive news. The German economy may grow more than 1% in 2027. No one's going to be putting that on a calendar, I can tell you that. Treasury Secretary Besant says the US is headed for a low inflation, low growth situation, but says inflation will roll over next year and we will have great growth next year. He says 2026 is going to be the year for Main Street. We can probably stick that on a post-it note somewhere, see if he's true. Right, the old Fed chair goings on. Trump, he's busting at the seams to tell us who it's going to be, but he's trying to refrain from doing so. He came out yesterday saying he will be announcing the new Fed chair early next year, then caveated that with a probably. He says he knows his pick. He says he looked at 10 candidates and we have it down to one. From that point, Hassett remains the favourite for that, given all the sources pieces. And then Trump even went on in an appearance yesterday to talk about Hassett. He says, we have Kevin Hassett in the room, potential Fed chair. And so it looks like it's a done deal, but it's not official yet. But as I say, there's no way Trump is going to be able to sit on his hands until the new year and not drop who it is, giving enough hints along the way. Kay, we've been talking about this Hassett. Yeah, there's the market's obviously going to react to it, but I think that excuse for these moves is spreading a little thin at the moment.
Yeah, I mean, you've got the announcement effect, and the potential announcement effect, then putting Hassett on top of the list without Besant confirming. Now Trump confirms without confirming. To be fair, there may be a little bit of that in what we're seeing in the dollar, but as I said this morning in the room as well, I think there are various factors. I think people have tried to buy it for quite a while. I know I can get yellow carded for this, but is year end not starting? The other plausible explanation is that we've seen yield differentials come down, and they haven't really worked for weeks. But for instance, euro and dollar differentials are in the short end are at the tightest that they've been in a while. Sterling versus dollar is also creeping up a little bit. The yen yields are continue to push higher, where the US yields, the 2-year yield has dropped back actually to 350%, which is, we could argue, extremely neutral right now. The 10s also have shied away from the 415, 420 mark. There's a couple of things working against the dollar right now, and I think it's just a mix of stuff. And as I said, maybe well, there's always flows coming out of the blue or expected or something people need to window dress and etc. etc. It's not rare that we have seen flows start around this time of year, even earlier, but with so much uncertainty that we have over the course of the year, maybe people have waited. But the start of December is clearly one where we have to be a bit careful with the dollar, I think.
Yeah, and I mean it could be also, particularly against the euro. The euro is doing nothing, or Europe is doing nothing, should we say? There's no policy moves. There's no, real big moves in yields. This isn't a central bank who is on its hands, going to be on its hands for the foreseeable future. There is no trade there at the moment, and so that's pretty much staying steady, and everything else around it is moving. So the dollar's doing a lot of the work here. The euro isn't rising because everything's particularly boo in Europe. It's because the dollar's weakening, and it's that you need to keep an eye on. Go on.
And let's face it, because we are doing shows every day, so we are trying to find something every day. But people are, I think, especially when you talk about the euro, thinking too much. every 10, 15, 20 pips move is an event now. Let's not forget that we are still in the same range that we have been for what, a year, or at least no, not a year, but for months, right? We're still in this
Yeah.
in this. Okay, we had a bit of a dip below 115, then we had a bit of a move above 118 in come September or so. But we have been in this range for so long, and we are just mid-range, right?
Yeah, exactly.
I
I mean,
mean,
it's obviously holding at the top of the year's range, but yeah, it's been sideways since the summer, pretty much, with
I,
the odd exception.
if you look at the really long term, I'd still argue that we are in kind of a correction or consolidation phase, but maybe with a dollar that might weaken a bit further, and but therefore the euro will have to push above 119, and but for the rest we're still in that range. If you look at the weekly moves, I mean those are not big stuff, and that's we are not in a huge trend right now.
Yeah, no, exactly. Not at all. Well, as I say, we're maintaining the year's trend. We're certainly
Mm,
not. I mean,
mm,
we couldn't even get down. We're not even close to getting down to the
mm.
38.2, which has been done in a lot of other pairs that have seen similar moves. But yeah, it still look. You look at it long term on this weekly, it still looks bullish, just because the dips are pretty. This dip is pretty shallow, even though it's 400 pips. But in the context
Mm.
of this whole move, it's pretty shallow. But it's not,
Which
as I say, it's not.
which was the risk when we spoke and when I said beginning of the year. I don't see it being a very good year for the dollar because of U.S. policies. And but still, I mean, we have been in that up and down range now since what, September or so, or even August. It's tough to find for the longer termers. I don't think that they are worried if they're short dollars, but you still pay funding, right? If you stay long euro dollar for 2, 3, 4, 6 months, it's going to cost you. So, and I think maybe that's also one of the reasons why it's a bit slow going in the euro. And as you say, I mean, the euro is running the eurozone is running what, 0.23% GDP growth.
Yeah, yeah,
That's not
not a lot at
something.
all.
I think it's really the dollar side which we are looking at if you look at the really long term.
Yeah, absolutely. Right, let's move on to all the Russia-Ukraine goings on. So we had this Putin Witkoff meeting yesterday, but before that happened, Putin decided he was going to throw his weight around a bit and do some chest beating and work on that divide between Europe and the US. He said Europeans have been detached from talks by themselves. He said they hinder the US admin and Trump from reaching peace through talks. Europe doesn't have a peaceful agenda. They are on the side of war, and the demands they seek are not acceptable to Russia. And if Europe wants to fight a war, we are ready now. And then he went on to say he will increase strikes on facilities, and Ukrainian vessels will take measures against tankers of countries which help Ukraine, which sounds like he wants to broaden things out, and says he may cut Ukraine off from the sea if attacks are continued. So a bit of chest beating before that meeting. So everyone was waiting around for the result of that meeting. They had it. They walked away from it. It was described as productive from a Russian envoy. That's as good as it got. But later on, we got some comments saying we are no closer to resolving the crisis. And there is much more work to be done. This is from the Russian side. It says a compromise solution to the territorial issue has not yet been found, but the American side has announced its proposals. Then this morning, the Kremlin came out saying talks have a better chance of being productive if they are carried out without public commentary, as they do not favour megaphone diplomacy. So all full of digs and whatnot. The European Commission, after months and months and months and months and months, apparently going to make a legal proposal this week to use Russia's frozen assets for a loan to Ukraine. Now, this is potentially an upsetting move because we can probably expect that Putin, part of his negotiation will be that he gets all his frozen assets back or unfrozen. So this has continued to be a step that Europe doesn't really want to cross. And I don't think they particularly want to cross it if we're close to peace, because that could tip it all over. And then Putin's got the excuse of blaming Europe for why there wasn't peace. So it's a delicate topic that the EU are dragging its feet behind. What happens if things all fall apart, though, is another question, and we'll see what happens from that point. Kate, your view of this, where are we at? Things are still ticking along, but Russia's not in any rush, it seems, still.
They're not in any rush, and red lines remain red lines. They still want the rest of the Donbas region. The lines Putin spit out before even the meeting with Witkoff, the press and the market has taken them made the sentence a bit apart, actually, because he did say that he said already 100 times he doesn't want war with Europe, but if they want war with them, then we're ready. But yeah, the market reacted to it, and then the press made a big one out of that as well. It's still a very difficult one to find an agreement, because it's the Russians have their lines of discussion, and everything that the US would change to it, because that's exactly where they blocked, right? Where they said, like, oh, all changes that have been made asked by Europe and Ukraine are unacceptable. So where are we? I don't know. I mean, or the possibility is there that they are now trying to gain time to come up with a solution where they don't lose face. But how hard is that going to be? And just let's not forget that they have those Chinese and Koreans behind them, so North Koreans behind them, and who else? If you look at even South Africa was sending soldiers over. So yeah, we're not at the end of it, right?
No, but
No way.
maybe they can get something done before the year end, but we shall see. We shall see. Yeah, we know China's always got their back up as well. Right, that's all I've got on the news front. Anything else, Kate?
No, thank you.
Good. Always like to see it. Let's have a look what's coming up today. Oh, it's Wednesday, so it's ADP today. That's probably going to be the biggest number to keep an eye on. We also get the ISM services number later on. But what are we expecting for ADP? 5,000 is expected from a prior 42,000. Now, I don't know how that works, Gabe, because all the ADP Tuesday numbers we get to be negatives. So how are we expecting a positive?
Yeah, remember what happened last month, right? There was like what was it, 80K difference between monthly weeklies. I don't know, mate. It's probably going to be reacted to, because it's before the next real jobs data. Although we will have in the ISM we will have the employment component, right? But yeah, apart from that, it's an employment number the market may react to. It comes out as expected. I don't think there will be more too much reaction to it. But the ISM, I would say that's going to be one that the market is going to watch. If I'm not mistaken, oh yeah, we will have the claims tomorrow, do we? Okay, that's another one. But we're getting really close to the FOMC, right? So there's few real data points left to really react to and to take into the FOMC. So that could be a pretty important day today. And then again, I would say maybe especially the ISM, which is top of my list, I would say.
Yeah, as I said, this week, this is all we're getting ahead of the FOMC. So that's going to be the data that counts. So we should get a bit of a move. The surprise will be, obviously, if it is a big positive number in that ADP, and then we'll see what this dollar selling has got to say for itself. But that might be something that's worth looking at from a dip buy. Though I would say, we keep seeing these moves where the dollar gets sold off in the morning, and then you get to US and it gets bought again, and we keep seeing these up and down patterns a lot of the time. But we've definitely got a trend going on. So I think maybe the market will be looking at a dip buy on good numbers.
Yeah, high lows for the time being.
Yeah. Let's see what goes on from there. Right, I'm going to have a look at dollar yen, because that got nicely back above 156, but couldn't stay there for long. We hit this again, a bit of a minor level, 156.20s. We've come back down, back through 156, back under this other bit of a level at 155.70s. So we didn't manage to take out any of these little highs. So we're keeping the series going of lower highs coming in. Just a question of whether we can get back down, have another look at 155, and whether it puts up a bit of a better fight than it did the other day. But soft data today. I think this one is going to be pushing a bit lower. It still doesn't look like it wants to. It still looks like the yen weakening is a bit of a harder trade to come by at the moment. The old BOJ index came down a little bit to 75.40, I think. 75.51 it came down to, from 75.74, I think it was yesterday, if I recall correctly. So that's still floating around the mid 75s, but it still looks like a bit of the pressure is off the yen for now, Kay.
Versus dollar, it is on the crosses. It remains still on the weak side. I have an interesting one there on the dollar yen. 154.75 90 is a bit of a level on my in my book, on my picture. So it's an interesting one down there. If it would at some point give way. And the data in Japan are not that bad right now. So I don't know. It's all up in the air. But yen crosses, if you look at those, they are still yen is still weak. Yeah. And I think that's why the index came down. Dollar like moved 0.23% or so, if you look at it in percentage. But the yen crosses are back at where we left them. Huh?
But do you think this is on yen weakening, or the strength we're seeing in euro, in Aussie, in the pound?
I think it's still yen, mate. Yields are up in yen, which should in theory be kind of supportive, but it's I don't know. Maybe we are going to know more once we get FOMC and Bank of Japan out of the way. I wouldn't be long dollar yen, that's for sure. But then on the other side, I wouldn't be short yen crosses. So
if you want to keep an eye on, and that Bank of Japan is going to be very interesting. If they do hike, what they, as Ueda said, they're going to have to explain how they're going to move forward from that point, because this is still, as he put it, a removal of easing, not tightening.
And the thing is as well, if since the government already said that they were going to issue more of the short-term bonds, is the Bank of Japan in every statement that they've given so far, they've always said like they stand ready to do whatever is necessary if the markets go bonkers in the JGB market. So if they give any hints at we stand ready to do unscheduled bond buying, if that comes together with a rate hike, the effect of the rate hike will be nullified very, very rapidly.
Yeah, and the effect of the rate hike could be nullified as soon as we get the press conference.
Absolutely.
If they indicate that they're hiking and then it's going to be another extended pause, or they need the outlook to do more in the future, so we could have a bit of a big old buy rumor sell fact.
Yeah, and I think they have to hike in December, or the yen will be in for a tough year end. Maybe not versus dollar, but versus all the rest.
Yeah, so on the fiscal side, it may not be looking to weaken, but if the BOJ is we're one, and then waiting for another 6 months. Yeah, I think the yen is going to get clobbered a bit. Whether it's enough to go back to those highs is another question, though. But we'll wait and see what happens at that time. Right, dollar CAD, I'm going to have a look at as well. That's not doing too good. I've just thrown in the little bit I took the other day long at 39.80s. I've tipped that out at 40 because this bounce looks a bit weak, hitting that 20-30 area and then coming all the way back down again. So I'm out of that. I've still got my core long from lower down because we're still in the trend. But just that ad I did the other day, I've bolted out of that one, not liking it. This one, again, a bit of a dollar going on here, but we have had oil maybe influencing a bit with that no progress out of Ukraine, Russia. We've seen oil markets ticking up a bit. That'd be good for the old petrol prices, the old pumps. So we're still looking really heavy. So that feature hasn't really changed. But, we've got this move coming down. So it's really quite a small move that we've seen on this Ukraine stuff, but could be just having a little bit of a weight or helping dollar CAD as well, helping the Canadian dollar. But yeah, looking at that, it doesn't look too hopeful. Kay, if we do get a solution, is oil going to be crumbling as well?
That's a very good question, because obviously war is an oil glutton. That's the traditional way of looking at it, right? That's what happened every time there was an uproar or worsening of the conflict. But then we have seen it's coming all back down. I would argue if they stop war, is it not going to be worse for stuff like silver? Because it's and I'm making the comparison because isn't war being how shall I say, electronified of late? They're sending more drones in there than they are moving tanks around, right? And it's just something that I was thinking about. And if that is kind of the correlation, if that way, and I know it's counterintuitive, but if that's the way that we may look at things, is oil not going to get support for reconstruction? And so looking at it from a completely opposite angle of everything that's been seen before. So I really don't know. Maybe oil is ticking up now because they didn't find a solution. That's possible. But it's a hard call for me. Really, it's a very hard call.
Yeah, it's something I was thinking about a couple of weeks ago. I think you've got to look at it in two stages. You've got to look at the initial reaction you get to peace, which is probably oil, gold down, silver down, defence stocks down. But then you've got to look past that to what's happening, and that's Europe rebuilding defences. Like you say, construction in Ukraine. No one suddenly go, oh, we don't need any missiles or drones anymore. It's going to be a big, massive restocking going on for the next bum fight. So I think outside of the short-term reaction, the longer term still would favour, oil, still favours your precious metals, still favour your defence stocks. So yeah, I think you've got to look at it in two phases, perhaps. Right, I'm going to pass it over.
Thank you very much. And first of all, let's have a look at what's happened in the cable, because yesterday we were talking about that in our chat rooms, in our Flowonomics room, and Mark brought it up as well. What happened here yesterday was looked pretty significant, to be honest. We've had several attempts, under 132. Down to this 131, 85, 90 support, which were all bought without an exception. So these are the 1 hours. We had like you see here, we had several attempts under 132, and they were all bought. And that was pretty significant yesterday, because at the same time, we were trying up at 88 in euro sterling. Maybe those two were linked, but since we have seen the cable actually outperforming the euro dollar, with the euro sterling being a little bit more on the defensive, getting a bit tired up at that 88, and we just actually retested the first support 87.65.70 around, and cable outperformed, and also supported by what's happened on the PMIs, even though they came in, what was it, slightly, no, they were actually pretty good. A little bit weaker than the month before, but still comfortably or relatively comfortably above the 50 line. And now we are back here into this resistance area. Okay, 132, I would say 85, 133 the figure. That's going to be the level to watch for when we will go into ADP this afternoon, and but I would say especially into the ISM, which in theory would be a bigger driver in my opinion. So if that breaks, then we may have a quick look at the upper end of the 133s, where we also had a lot of traffic in the past, and it goes back even further around this 133.60 up to 80 zone. And that is going to be an important one to monitor if we get weaker data out of the US this afternoon. In turn, if we get something better, then we also look back at what's been trading here, and that's going to be the 132.40.50. If we close the day back below 132.40.50, then we're probably going to have a look back at 131 and a quarter, or even 32, sorry, 32, 15-ish, or even back below 32 the figure. But for as long as this 40-50 hold, I would say intraday it's looking kind of positive for this cable. Also looking at what's happening globally on the dollar for the time being. So it may be that it's not going to need too much of a big miss on the ISM, and then again look at the headline numbers, but also keep a very close eye on what's happening in that employment index, of course. So if we break above here, we could do a quick run up into the high 133s, perhaps in the cable. Euro, we've already spoken about it. 116.55. We're above, but very, very shyly. I I'm a little long, but not really not much. See if we can break, but we are going to need confirmation through 116.70, right? It's already cooling down a bit, and we are already turning around this level again. But also, euro dollar is maybe not going to be your most dynamic one for a move higher, but assuming that we would break above 116.70, then we are going to have a look back into the 117s, right? But if we close on the day back below 116.55, 50.55, we're just going to hang around here, I think, and potentially have a look back at 115.90 perhaps. But for the time being, yeah, just hanging around there. Just hold on one little second. What was I looking at? Oh yeah, Aussie and the Kiwi. So the Aussie has moved above this prior high around 65.80, but we still need to overcome this 65.97.98, which is a 61.8 of the move lower that we saw from September into November. Really, that's going to be the big one for this afternoon. Give and take a few pips, it's going to be 66 the figure. We look 66 the figure if we break above 66 and a quarter. Big decision time, in my opinion. If we get up there, I'll stretch it to 30 maybe. But this level is going to be a big one. For as long as we're above this 50% around 65.65, it's kind of supportive, I would say right now. Okay, so this, I think 65-ish is going to be the level to monitor whether we are above or below to close the day today. So after the US data, okay, we get back below, it's gonna look a little bit less sexy in my opinion. Work in progress on the Kiwi. We are trying to get moving above this trend line intra channel. We are still in the longer term in a bearish channel, but it's quite wide. But we are trying to hold above here, which is 57.40.50. For those trading Kiwi, that's going to be the zone to watch. Whether we are above or below on the day this afternoon is going to probably decide where we go next. And it is again underperforming the Aussie. So Aussie Kiwi is just sticking its head above this 114.50.55 again. If we hold towards the end of the day, I guess a move up to 115 should be seen. Okay, and then this move down would look a bit corrective, in my opinion. Okay, and we may be just gradually pushed through, because we are seeing the Kiwi underperform just that little bit again. Okay, so 114 and a half, it's above or below, would be the rate to monitor, I would say. What's happening on those metals? Well, interestingly, yesterday we saw this move higher here from second part of November, from around 4,000, and then hitting that high around 42.65. We stopped on the 38.2 yesterday. This correction here stopped on the 38.2. Okay, and again, I think this afternoon's data may be interesting. We are turning around this 42 zone here, neutral on the day, but having stopped on the 38.2 and found support there above what I would call the more medium term, now bigger support around 41.30, is still keeping this in a relatively bullish picture overall. Okay, if we get down below 41.60, we could have a look at that 41.30, but then see what happens there. Okay, if we get down below, of course, deeper correction. But it's only half reacting to Ukraine Russia stuff of late. So I think gold may be on a bit of a different agenda, and I would rather look at where the yields are going this afternoon. Okay, if the yields come down, it's probably going to retest 42.30, maybe 42.45 before this level here. But keep an eye on what the yields are doing. Okay, because gold came down when they were ticking up, and then when the yield stopped and when they started to turn down again, gold started to creep higher again. Silver still extremely bullish, right? And already 56.5 around there was holding. That's your range on the day, 58.80, 56.5 ish. We're turning around 58. The figure. It's not going to need much to get back above there and move closer to 60, it seems. Only below 56.40 can we expect a bit of a deeper correction, but then again, is it going to break back below 54.5 remains the question. This still looks quite impulsive in my opinion. And I think we've looked at enough for today. Ryan, I'm giving it back over to you, mate.
Thank you very much, mate. Yeah, we shall call that a session. Thank you, as always, for coming to the Flow Show. And don't forget to catch us on Face, where we'll be covering the ADP live as it happens. Have a great day, everybody. We'll speak to you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.